Can you sell your house before paying off your mortgage? Hey, so you may find yourself, like many folks, needing to sell your home. Perhaps there's life events that's requiring you to downsize, maybe even upsize to new spaces. Perhaps you're an investor or you're a landlord and you're tired of being a landlord and you find yourself wanting to sell your home. Perhaps you just refinanced out or you bought the property at a time where the market was high and now the market has dipped. And now, unfortunately, you have a mortgage out there that is higher than what the value of the loan is. And you find yourself either having to bring money to the table to make this close or transition happen, or risks remaining underwater, or continue to take on the responsibilities of a landlord. So, what can you do? Can you sell your home when you have a mortgage on there already? What's going on, everyone? I'm Courtney Rollins with the Aqua Team, and we're at the Aqua Team. We simply solve dilemmas and cultivate opportunities in real estate. Today, we want to talk to you a little bit about one of those opportunities, and that is taking over payments when you have an existing loan. So let's get to it. Can you sell your house before paying off the mortgage? The answer is yes. For most situations, in most cases, you can. And quite simply, how you have a trusted team of professionals take over your payments is one of the possibilities. And again, that's what we're going to explore today. So, taking over payments. Here's some frequently asked questions that come up whenever we discuss this with potential clients. One is how. And it's a pretty simple answer. We contact the bank or the lender and we say, hey, we are now taking over the payments for this particular loan or property. How would you like those payments arranged? And it's really, truly as simple as that. Now, every bank or every lender has different ways they want the loans to be paid off. And quite often, we'll have a third party servicer set up their payments so that everyone can see what's taking place and there's full transparency. Is this legal? Another great question. Yes, this is completely legal. If you ever look at any of your HUD-1 statements, you look at line 503, existing loans taking subject to. This is done every day in real estate and is a great tool used, particularly in situations like this, when the seller doesn't have enough equity to make the transaction make sense in a more traditional route. Does my name stay on the loan, or are you assuming the loan? Two very similar questions. And the answer to the first is yes, your name does stay on the loan, which is why it's very important that you have a very trusted real estate professional that you're working with when you do this type of transaction. We like to think that our testimonials and the people that we work with can testify to our integrity and our professionalism and our ability to fulfill our obligations. Are you assuming the loan? No, we're not assuming the loan, which requires us going through a long underwriting process. The benefits of this type of strategy is the actual flexibility and the speed and convenience and the lack of need to even have the bank involved when it comes to qualifying and setting up the structure of the deal. We are the new owners as we take over the title or deed and are responsible for the taxes, the insurance, and all the other responsibilities that come with home ownership. What if you want to buy another home or qualify for another loan? Great question. If you've been involved in any loan applications, which you have been because you have in the loan, if you're on the existing property, more than likely if you're looking at this video, there are questions about the debt to income ratio. And we simply submit an income verification form to the new lender to show and verify that the income is being paid for this loan. It's something that's done every day, and it's actually something that's very similar to if you were a traditional landlord or renter and you kept properties in your personal name. Uncle Sam allows you to keep about 5 to 10 properties, depending on your credit profile, in your name. And how you do that is you show that the loan is being paid off by traditionally the tenant, in this situation, the new owners. Who's responsible for the repairs, taxes, and insurance? And just like the bank, you are no longer responsible for those. We are responsible for those expenses and responsibilities related to the home. It's quite simple as that. What if you don't pay or you default? Let's say I get hit by a bus or I take off, or someone you're in this deal with takes off and runs to some island in the tropics. Well, the agreement is secured by the property, and with the third-party servicer and the agreement secured and the note created, you receive the property back at its reduced principal balance if for whatever reason we or someone in your company with defaults. Again, this is our business model, and you don't get to survive or stay in business long if you're not following what you say you're going to do. So we have every intent to work with our partners and to fulfill our obligation. However, it is a great question to ask, and you're, again, secured by the property. What about the due on sales clause? Great question. The due on sales clause is in almost every single loan document that says if you transfer ownership, then the original lender can call all the money due at that time, or at any time, actually. Well, one, this is a clause that is very rarely used, especially if the property is being paid, the monthly payment is being paid. The lender 9.9 times out of 10 is interested in knowing that their loan is being serviced and being paid for. However, what you can and what we do is transfer ownership through a trust, which legally does not evoke the due on sales clause. You can transfer ownership in a trust, which allows for this to be up on the P's and Q's. And we have trusted attorney, real estate attorneys, be able to create the documents necessary so that all T's are crossed and all I's are dotted. How long does the loan remain in my name? Until we sell or the property or refinance into another loan. The great thing about this type of transaction is quite often we're taking the property and we're finding a new homeowner who, for whatever reason, can't qualify for a traditional bank loan. We sit with them, we work with them, and help them throughout that time period qualify for the loan and be able to pay, put the new loan into their name, which allows us to receive profit center there and allows us to create a home ownership in a situation where it wasn't created. So we usually don't try to put a specific time limit on that time, but we have every incentive to refinance or resell the property as soon as possible because that's one of our largest profit centers there, and we're fulfilling our company's mission, most important. So these are win-win-win, we like to call it, when the property in the situation meets these criteria. The seller gets the relief from the property mortgage, the end buyer gets a home that they would not otherwise qualify for, and we get to fulfill our company mission to solve dilemmas and cultivate opportunities in real estate. It's really a win-win-win. Definitely is encourage you to look at our testimonials or whoever you're working with to make sure that you vet those folks, because this is, like any agreement, something that you're stepping into, and and you want to make sure you're working with people who are on the up and up. We have the privilege and honor to work with many people in this area, and we enjoy being able to provide this service to our community. So if you have any questions, please reach out to us at the Aqua Team, www.atbuyhomes.org, or call me at 443-419-7979. Someone on our team will connect with you and hopefully answer any questions that you have. Until then, this is Courtney Rollins signing off, saying rising tides lifts all sails.